Attorney Haskell, tax season is approaching. There are so many questions that people were asking. And the first question I'd like to ask you today is who should be concerned about estimated tax?
Estimated taxes are for people who know or should know that they're going to be owing taxes come April, primarily because they have income against which they have no withholding. I, for example, file quarterly estimated taxes because I'm self-employed. I don't get a paycheck every Friday, and thus I have no withholding. In fact, I also haven't paid my Social Security and Medicare, and so I know that I'm going to get clobbered come April 15th if I don't pay anything. For me, I suppose the estimated tax is kind of some manner of convenience. At least that's what the IRS tells me. It certainly keeps me from writing them one big check. Instead, I get to file for mid-sized ones. However, it's also the real idea here is the IRS doesn't want to wait for its money, and it doesn't want the collection problems that come from waiting for its money. So whereas workers have their taxes paid, or withheld from their paycheck every payday, for me, and it's not just self-employed people. It would also be people who have significant rental income, significant dividend income, significant capital gains, basically anything that's not wages or does not otherwise have the withholding taken from them. But also you have people who just habitually owe. For example, I have clients who have two jobs and they always get their withholding wrong. And every year I tell them they're doing their withholding wrong and they don't fix it. And then suddenly what we find is when I'm doing their taxes is the tax return is generating estimated tax vouchers because they've reached that point where under the IRS's rules, they're supposed to be doing quarterly estimated taxes. In terms of what are quarterly estimated taxes, they're, as the name implies, they're estimated taxes you pay 4 times a year. They're due April 15, June 15, September 15, and then January 15 of the next year. So for 2024, that January 15 would be January 15, 2025. There are 2 ways to come up with the amount. One is to try to guess how much you're going to owe in April. That's very hard for most people to do. So the IRS has created a safe harbor, and basically we take what you owed this past April and kind of divide that by 4, and that's your estimated tax payment for the next year. If you stay within the safe harbor, at least you can avoid the penalties that are associated with not paying estimated tax when you were supposed to.
Thank you for the explanation.
Of course. Thank you.